Hello everyone and welcome to the Genuine Learning blog. My name is Jacqueline from Galasso Learning Solutions, and today I'm going to talk to you about the new proposed ethics interpretation issued by the AICPA's Professional Ethics Executive Committee, or PEEC for short. The exposure draft focuses mostly on fee dependency and the related impacts that has to independence, which is an important issue for firms, and the changes that they are proposing are definitely going to have an impact on the practice. So if anybody recalls, last September, Ernst & Young announced that they actually wanted to split out their accounting and consulting practices into two separate businesses. And the reason why they did that was to attempt to avoid any conflicts of interest that can arise when you're doing auditing work and consulting work for a client. So their hope was that once they were separated, the advisory and consulting operations would be more profitable as they are less constrained by the conflict of interest rules that are currently in place. However, a few weeks ago, it appears that they actually abandoned this idea and that they are not going to attempt to split out their business into two different practices because they were actually met with a lot of opposition. So as a response to potential scenarios like this, the AICPA is trying to definitely tighten the rules around independence and fees. So with that being said, let's go ahead and get started. So what PEEC has decided to do here is they propose two new interpretations and two new revisions relating to fees. So this proposal is actually part of PEEC's ongoing efforts that they have to converge with the International Ethics Standards Board of Accountants, or IASBA for short. So if this is adopted as final, the new and revised interpretations will be applicable to members in public practice. And also note that PEEC had issued this on March 15th, 2023, and that comments are due back on June 15th, 2023. So just to give you a little bit of background on this, recently IASBA embarked on a fees project where they actually went in and reviewed the provisions of their code of conduct, specifically relating to fees. And the reason why they started this project was actually to respond to a public interest need to deal with fee-related matters, including those that affect or are perceived to affect independence. And when they say independence, it is independence both in mind and in appearance. And remember that the AICPA has that goal of convergence with IASBA. So PEEC actually appointed a task force where they went in and they evaluated all of the new amended rules from IASBA to determine if any revisions to the code of conduct were necessary. So the task force, they met several times and they evaluated the differences between the new IASBA guidance and the AICPA's existing guidance, and they began with a gap analysis. So based on these evaluations from the task force, PEEC is proposing two new interpretations relating to fees. The first one is that covered members should not allow fees from an attest engagement to be influenced by fees from providing other services to the client. So this relates to that Ernst & Young example that we discussed at the beginning of this blog. So while PEEC acknowledges that determining fees is a business decision, fees should not be dependent on whether additional services are being provided to that entity, because that would impact your independence. So this proposal applies to all attest engagements, not just financial statement audits and reviews. And also note that firms are included in the definition of a covered member. So the second proposed interpretation is specifically relating to fee dependency. The PEEC proposes that safeguards be applied when fee dependency extends for 5 consecutive years. So the PEEC is actually proposing a principles-based approach, which allows members to use professional judgment to determine when specific facts and circumstances create threats to independence. So fee dependency is defined as existing when total fees generated from an attest client by the firm represent a large portion of the total fees of that firm. So when a fee dependency exists, there are threats to independence that are created that could actually be significant, especially when the fee dependency extends for more than 5 years. So the PEEC is actually proposing various safeguards that can be put in place to reduce these threats to independence to an acceptable level. And that's what we're going to discuss on the next 2 slides. The first one is how to identify, whether a fee dependency exists. And then after that, the different safeguards that can be used. So when we are trying to evaluate whether fees represent a large proportion there are different qualitative and quantitative factors that we should consider that might be helpful. So the first one is the size of the attest client. And when they say size, it's size in terms of the percentage of fees or the dollar amount of fees versus total revenue at the firm. Number two, so the significance of the attest client to the firm. Significance is in terms of the time the firm devotes to the client, the effect on the partner's stature within the firm due to the partner's relationship with that client, the manner in which the partner or office is compensated, and also the effects that losing that attest client would have on the firm, partner, or office. So all of that would qualify under this client being a significant client. Also, the importance of the attest client to the firm's growth strategies. So, for example, is the firm trying to enter a particular industry? Number four is the stature of the attest client. So the stature may enhance the firm's eminence in the marketplace. That's also something that needs to be considered. Also, whether the firm also provides services to related parties. So maybe the firm provides professional services to affiliates or owners of that attest client. Also, whether the engagement is reoccurring. So is this a client that we've had, for various years? In addition, the operating structure of the firm and whether the firm is expected to diversify such that any dependence on the attest client is reduced. When fee dependency exists, Peak proposes the below safeguards. So the first one is having an appropriate reviewer who has not provided attest or non-attest services to the attest client to review that work before the report is issued. Also ensuring that the compensation partner is not significantly influenced by the fees generated from that client. In addition, implementing policies and procedures for identifying and monitoring the significance of client relationships, assigning a concurring review partner who is not associated with the attest engagement, subjecting the assignment of engagement personnel approved by another partner or manager, periodically rotating engagement partners, and also subjecting significant client attest engagements to internal firm monitoring procedures. So these are all various safeguards that Peak is recommending if you have a fee dependency, especially when it exists beyond 5 years, to hopefully reduce those threats to independence. So in addition to the proposed interpretations, Peak is also proposing 2 different revisions. So the first one is a revision to the conceptual framework for independence. And this is basically intended to clarify and highlight fee-related threats. And I also specifically want to highlight that little sub-bullet point there. So what they have added is a large portion of fees charged by the firm to an attest client is generated by providing non-attest services as an undue influence threat. So that's extremely important, and I just wanted to highlight that. So in addition to that, the other revision that they're proposing is a new exception in the application of the client affiliates interpretation to specify that fees from affiliates are not required to be included when calculating the total fees generated from the financial statements of an attest client. Alrighty, and just to remind everybody, comments are due by June 15th, 2023 if there's anything that you want to submit, and comments can be submitted to ethics-exposuredraft@aicpa.org. Alrighty, thank you guys so much for listening to this week's blog. I hope to see you again on a future blog. And once again, my name is Jacqueline, and I hope you have a wonderful week.